Okay, let's do a quick gold analysis. So what we have here on the daily time frame is some bearish price action because of the thin and lower volume that's likely to be today, be in place today due to the US holiday. Um, we may well just see a bit of a retest to the downside of the previous low. So around 1812 of this move. So we've broken out, we've been to the 618, we've bounced off there nicely. So we're just looking for a retest of that 618 and then ultimately get down to that 764, which is at around 1801.64. So again, round it up to 1802. So 1812 and 1802 downside targets for gold. If we just drill down and just look at that in a little bit more detail. So right now what we're seeing is this is a 4 hour time frame. We had the break of the trend line. We had the head and shoulders reversal off the 764 using our 764 strategy. And that was using or based on the last swing high and last swing low. So last swing high, which was 1875 down to 1785, almost 1,000 pips, about 900 pips swing. And so then we had a lovely pump up, final pump, which we caught, didn't we? We caught that for a nice 100 pips spike up from about 1842 last week to 1852. So that was a nice trade. So now off the 764, we've had a rejection candle and on the 4 hour, which is quite powerful. Bit of consolidation of this range using support, and then it broke. Bit of a pullback. Explore that pullback there. It's probably a 50% pullback. Okay, what's no 61.8? There we go. 618 pullback around 1847. So that was the ideal entry on the retracement using our momentum strategy and in conjunction with the 764 strategy. So we've got some good momentum, break of that trend line. We're going short. We took some money short again, didn't we, last week as well? So we went long here, and then 2 days later we went short, and that was our money made really, just trading gold, long and short, which was quite nice. We went down to looking for 1820, which we got there, actually stabbed on down through, and then we've had a bit of choppy price action. But as you can see from this price action currently, curling over, nice bearish sell off, and we've just had a bit of a spike up to 1820, and now it's coming back, giving it back. So I'd say if it breaks above the 1820 area, 1821, stop should be considered above 1821. Because if it breaks there, then we're just going to see potential for further upside, which is not something that we're going to be all too interested in. If I could just show you this again, just in a little bit more detail, so we're not confusing the price action with the previous range. So what we have here is let's pull this back a little bit, just so you can see. There we go. Oh, no, that one's good. Let's do this one here, just in case. Here we have. Bear with me 2 secs. This one here is. Is that the one? I can see that there's a few here. All right, so let's just pull that back a minute and actually get rid of that one as well. So we're clearing it all. There we go. So we just keep it nice and clean. So you can see here that this is the previous range that we have. So now I know where we are with it. Let's put the values on the center here. Basically we're looking for 1812 and ultimately 1802 if it's going to break down lower. So again, if we just plot some fresh fibs, taking that previous low all the way up to the current high, and we just stretch it across, bring it all the way across, and we just put the figures, the levels, there we go, the key levels of interest. Then you can see that we are saying, okay, 1821 is a bit of a little double top here. We've got about 20 minutes of the close of this 1 hour candle. See how it closes. If we can get a bit of a nudge down, we may well start seeing a bit of a deeper correction and a final decent push down to retest the 1812 area, and then ultimately looking for a 764 move to complete the retracement. So we've gone up, and then we're pulling back off the 764 down to 764 this range. So we've gone up 764, 76%. We've gone up 76% of the previous swing, and now we're coming back down. So ultimately looking for the 76% of a retracement of that last swing. So swung up 76% here, another swing down 76% here. But of course we've had strong rejection off that 618, which you can clearly see with the pump up. And so it's given a lot of that back. So again, depending on the volume today, which I don't anticipate there being a great deal because it is a US bank holiday, so we may just be sideways and stay sideways in a range. If we were to see any sort of movement down, and it did only just stay in this little bit of a range, what you could do as a final thought, quite simply, get this here, take this low, take this high, and then just look for 15.37. So round it up to about 15.5 to 16, and you can see that we've been 16 already. So keep an eye on it on the 1 hour, and if we can get a bit of a bearish close, then potentially it will just continue down. But if we get a bullish close, then and a retest of the upside and a break of the 20-21 area, then let it go and ride itself up and see what sort of a retracement up we get, because it could be that this was the bullish move, and now we've had a nice deep correction of this first initial bullish pump, and now we're going to see further upside. So let it do what it needs to do. Let it pick which way it wants to go. Is it going to go up here before dropping, or is it going to go down a bit more before going up? Let it play out and then decide. So I think you've got to take each hour as it comes, hour by hour, because there's just a lot of noise on the smaller time frames. If you look here on the 15-minute, it's just that's just these unnecessary random spikes. Spike down and it was a spike up, which could be that was a fake out to the downside, and the up move could be the play. Again, just remains to be seen, because it is a holiday. It might just stay in this range. It might go up, down, up, and it might see another move down. So just to try and catch people out who's trying to overtrade during the holidays, which is not ideal really. So yeah, maybe avoid the noise on the smaller time frames, 5 minutes, 15, 30 minutes, and just look at the hour, 4 hour, and just focus on hour by hour and every 4 hours, and just see if it does decide to make some sort of a directional move, ideally with the continuation of the trend to the downside. But then, of course, if it takes that 21 and starts going up there, then I'd say it would be void to the downside and just leave it. It'd just be too messy. And just to show you that in a little bit more detail, finally, 1 hour time frame. There's the range that I've just highlighted. We've got EMAs on here, and it's retesting this current consolidating range. But yeah, you want it to actually hold here below, say, 21 area, and just basically drop down and continue down. But the volume's light, and we seem to have gone down, and now it's going up. Daily's encouraging though. The daily is still bearish, but of course it's a long day. We're on it nearly at the start really of the day, but it has got all the markings, all the makings of a potential sell-off. It's just a case of your entry and stop loss are probably going to define this trade. And as those of you that trade with me know, I like to swing trade gold, so it allows me to put decent 100 pip plus stop losses. So at the highs of this move out the way, because we know it's subject to this kind of flicking around, and it might want to try and stop you out before selling off. So just be careful with that. But ultimately, if it does do a sell-off, it might happen this week. Might see that move finally down to 1800 and below 1800 again, and maybe get down to that 1760 area, which was a key 50% fib for a retest, and maybe a triple bottom potential, 1, 2, 3. So yeah, I'm watching it for bearish momentum for further downside, and again, for that bigger move, your stops would have to be above today's high, which is at around 1827, so maybe 1828 for stops. Again, this is what I mean by swinging it. So shorting it from say 19 with stops above 27, that would give you about 70 to 80 pip stop loss but again for like a 90 to well 90 pip potential plus move, maybe then to open an up break of 1800, give you another 200 pips to the downside, or 400 pips to the downside. So the risk to reward is there, but it's a case of, do you want to hold it and do you just want to see it? And especially on a day like today where potentially there might not be much movement, is that something you want to do? So, just giving you an overview. Very important to understand price action. There's a 4 hour. 4 hour gives me 1812. Next downside target, retest of this N shape, retest of the lows. That I'd like to see as at least the first target at T1 down to about 1812. And then, as I say, if we could get lower, 1802 area, 764. So they are my potential downside targets. But if all of this gets taken out and price just goes shooting on up here, then I'm not interested. Especially if it breaks above the pivot point, central base pivot, then again, not interested. It's just going to try and force itself through and tear on up through all of this resistance, EMAs as well. Hopefully you find it helpful. If you have any questions, please telegram me. Personal telegram is at ALX_TYW.